Hello, today we are going to talk about how I identify volume zones. In the previous two videos, the first one I talked about all the tools and indicators that I use, and then I moved on to explaining how I use and identify each one of those. So the following video was about identifying support and resistance and how I draw them. This one I'm going to discuss how I use volume zones and how I identify them. The indicator that I use is called GS climatic volume, and I use the default settings. I don't change anything in the settings of this indicator. So, and it has only style and visibility, and there's nothing to change here for me. Okay, that's it. Okay, so the first thing I want to say is that many people analyze the dollar index for obvious reasons, and I do the same. As you can see in the dollar index, and this is something to note, that no volume indicator works on this tool, on the dollar index, on this market, let's say, because it's an index of the dollar. So there is no buying and selling in this one. So there are no indicators here. If we go to the Euro USD, we will find this normal default volume indicator here, this one. And there is the JS climatic volume, which is this one. If we try to put the JS here, climatic volume, see, nothing appears. So this is one. Let's move now to the Euro USD. Now the second thing, what are the time frames that I use? I identify volume zones in four main time frames: the monthly, the weekly, the daily, and the 4 hour. Normally the monthly and the weekly, I look at them during weekends in addition to the daily. On the trading days, I look at daily, the 4 hour, and the 1 hour, in addition to the 15 for, I only take a certain detail, but this is for another video. So let's go to the time frames as if I'm going to identify volume zones now. Actually, today is Sunday, so you can see that there is no movement and there is no price movement. So this one is drawn already. As you can see, in higher time frames, we will find very few only, if any, volume zones, and we identify the volume zones on the indicator. A volume zone is identified by a green candle on the indicator itself. This is one. Two, the candle on the price, it needs to have tails, and I'm using the Japanese candles. It has to have tails. If it doesn't have tails, it's another volume. It can be green on a candle that has no tails, but it has another meaning. It's for another purpose. So I don't choose volume zones with candles that have no tails at all. Even if the tail is very small, insignificant tail, I'm also very wary of using such candles. Let's move on to the weekly. The weekly, there are no green candles here. On the daily, there is this one here. So look here on the daily chart. There is this one here, and the following one is here. The previous volume zone, when I draw it, and then later on another volume zone comes in, I either delete or take away the rectangle. I will show you that in another time frame. So this is the latest on the daily chart of the Euro USD, the latest time zone. And as you can see, the not time zone, the volume zone. The volume zone is drawn from tail to tail. This ad appears because I only use the free version of TradingView, and you can see how I am capable and able to use the free version of TradingView to do whatever I want to do, although it's very limited to 2 indicators only. And in the first video, which is shown here in the cards here on the corner, on the top right area of the video, I showed you how I use TradingView for free using all the indicators that I use and the tools. So anyway, going back to the volume zones. So I draw the volume zone when there is a candle and a green candle on the indicator and a candle on the price action. I take it tail to tail from the high price to the low price. It's not only the body. It's not from open to close price. It's from high price to the low price. Let's look at the 4 hour and see if we can draw one there. Look here. This was a previous volume zone. This was extended to this area. Once another volume zone is identified, I take the rectangle away or I delete it altogether, but sometimes I keep it for reference. So now let's look at this green candle and see how we are going to draw the volume zone for this green candle. Okay, let's take the high price here. It's 1.0789, 8809. So 1.809, okay? And the low is 7021. 702. Okay, let's have it here. We'll fix it. We'll put down the coordinates here exactly. The exact coordinates. I think it's 2-1. Okay, we have a phone call. Let's see. So we have, this one is 7021, 7021, 7021. Okay, and I give it a template on we are on the 4 hours, so the template is the 4 hour. Okay, I do that, the template, so as to control the visibility. So the visibility here is only for 4 hours. So I make a template so that I don't have to go and change the visibility every time I put the rectangle. And as you can see, I have templates for different things. I'll show you. I have templates for the support and resistance rectangles. I have for the pivot zones. I have templates for the what do you call them? The supply and demand zones as well. Okay. So this is the volume zone. Now, one of the things that volume zones are used for. Look at how the price moved from the bottom. Here, it moved up. So one of the uses of the volume zone, some traders take the zone, if the price is inside and moving from one edge of the zone to the other, they take that trade. So if you found this price action here, at the close of this, some traders will say, okay, this is moving to the upper edge of the zone. So they take the trade up until that edge. I do that sometimes, but when the volume zone is wider, so if it has more distance, price distance, I'm sometimes encouraged to do that. Or if the price is moving from an outside area and moving inside, I might be encouraged to take it to the other edge. Okay, this is one thing. And of course, I don't use one tool on its own. I do not decide on a price movement or a price direction based on one tool. I'm only explaining here in each video, each tool, so that that tool would be clear to the audience. So another way is that some people look at the whole zone and they treat it as support and resistance. Okay, so this, for example, for some, if it moved up the volume zone and it showed a green candle, they will take that as a buy. But in this particular case, there is a trend line, and this trend line is acting as resistance. So it actually respected that line and went down. So going down, there is the other school of having, if it closed inside, coming from the upper area, if it closed inside, some take that trade, a sell, they take a sell position and move it to the bottom of the time zone. Now, if the price moved down again, some people use it as, we said, support and resistance. So if the price action showed a closing below and the confirmation, they will take a sell position that this price is going down. But this is dangerous here in this particular case. Why? Because exactly as there was a trend line here and acted as resistance, we have a support area here that it might just do the same. It might just bounce up from this support area and move up again inside the volume zone. Okay, so I think these are, I'm trying to remember if there is something that I need to tell you regarding volume zones. Of course, I take it with other tools. For example, if there was a support or resistance area inside here, if there is a pivot line like this one and this one here, in addition to other tools that I showed you in the first video, then I take them. I will link both previous videos in the description of this one. This video is also going to be included in the in a blog post, and I will give the direct link where this video is included in that article. If you're interested to read the article, some people like to read more than listen or watch. So if you prefer to read this explanation, it will be there, and once it's ready, I will link to it under the description here. If you did not find the link in the description, that means the article is not ready yet. Thank you very much, and in the next video I will be talking about supply and demand. See you then. Bye bye.